Good morning, everyone. Thank you for joining us for our June 2025 Director's Cut. Today, we again have Nathan Anderson with Department of Mineral Resources, and we have Justin Kringstad with the North Dakota Pipeline Authority. And with that, we will go ahead and bring Nathan on screen and give us our presentation.
All right, good morning and welcome to the June 2025 Director's Cut. Thank you all for being here. I want to thank the team at the DMR. One of the most recent things that I'm most proud of is the safety culture. Yesterday, I heard of a team of 9 DMR employees that came together to really work on and enhance the safety culture, something that I'm passionate about and I really appreciate. So thank you to the team at the DMR for continuing to work on that. June Director's Cut covers April production. And so with that, I think we'll go ahead and get started. All right, in the graph on the left, you can see that statewide production for April was at 1.17 million barrels per day. For March, it was at 1.193, so a slight reduction month over month. Gas production was at 3.47 BCF per day. You can see the green line on the graph is the Bakken Three Forks oil at 1.14 out of the 1.17 million barrels per day. That is 6.5% above revenue forecast. Revenue forecast for this biennium, which ends here in a couple of weeks, actually in 1 week, was at 1.1 million barrels per day. Production is down 1.8% from March to April, or about 22,000 barrels per day, March to April. As you can see, again, 1.14 million barrels per day comes from the Bakken Three Forks, or about 97.3% of the production in the state of North Dakota. That's 30,843 barrels per day, or about 2.7% from non-Bakken Three Forks zones. Gas production for the month, April was at 104.1 BCF for the month, or 3.471 BCF per day. March was at 106.8 BCF, or 3.446 BCF per day. Just a little bit of an increased March to April on a daily average. So, next slide. North Dakota top oil producing counties. As you can see, the top 5 haven't changed from last month. McKenzie County actually strengthened a little bit to 32% of North Dakota production coming out of that county at 11.1 million barrels for the month. Again, the top 5 counties make up the majority of the production in the state of North Dakota. 97.5% coming from those top 5 counties. This represents rig counts by state and basin. You'll see the total U.S. rig count is at 554. May, last Director's Cut, we were at about 578. So we are seeing a slight dip in rig count, mostly relative to the softer pricing that we've seen, softer and volatile pricing that we've seen. North Dakota rig count trend is at 32. We just checked that number today, and on a couple slides, you'll see North Dakota is at 30, as you can see in the graph in the upper left. But the number, the official number per the DMR website is at 32. So that remains steady in that count. I think there's a couple top hole rigs. So the numbers on the left come from the Baker Hughes rig app, and the number on the right in the upper right-hand corner come from the DMR website. So rig count remains steady. In the Williston Basin, there's a total of 31 rigs. About 273 rigs are in the Permian. There's a decrease that you'll see in the coming graphs in that as well. And there's 36 rigs in the Northeast United States dry gas play. Here's the rig counts over time by state. So 543, the rig count per the Baker Hughes rig app. You can see the dip month over month. The North Dakota rig count down in the bottom in the green remains steady at 30. The dotted blue line in the middle is that of Texas. And you can see that there's been a decrease in rig count in Texas as well. Here's the rig count by basin. Looks very similar. Again, 543, a dip in the Permian, which is the blue line, and then the Williston Basin represented in the green line on the bottom. But again, a slight dip in the Permian Basin, which looks to be attributing the majority of the decline in rig count month over month. All right, a little on pricing and activity levels. You can see that the rig count just down slightly. The frac crew count down 1 month over month. Current WTI oil price $65. Current Henry Hub gas price at $3.61. Yesterday, when we made the slide, it was up slides. It was up about $8, so we up $7-8. So we updated that this morning. Revenue forecast for the biennium, or this year in the biennium, is at $70. The April tax department number came in at $55.67, so 20% low to that $70 price forecast. And then March was at $60.68. So again, an indicator of softer pricing. But since we last met in a month ago, there's been incredible volatility. We signaled to the state that we thought that there would be an activity, a decrease, both rig count and frac crew count, and we haven't really seen too much of a dip. However, there's been quite a bit going on in the Middle East with tensions between Israel and Iran, and now recently the U.S. But yesterday I heard that there was a potential ceasefire between Israel and Iran, and prices actually decreased once that announcement came out. So continued volatility in the price of oil across the globe, and we'll see what happens over the coming month with the price and the ceasefire. But activity levels, if price stays where it is, or maybe even decreases slightly, I would again expect the activity level to soften just a little bit. Number of wells permitted in the state remains really strong. 105 for the month of May. April was at 108, and March was at 94. So strong permitting numbers in the state. The completion trend is strong at 74. April was a little bit of a dip. We indicated last month that we thought that was going to rebound, and it did. Rebounded very nicely. Kind of a note, and I think we're going to turn this into a slide eventually, a graph with the extended reach permits in the lower right-hand corner. This is your 3 and 4 mile laterals, which is a trend that we've been seeing for months and even the last couple of years. But there's been 966 3-mile lateral permits issued to date. There's been 47 4-mile lateral permits. So 4-mile lateral permits are becoming more and more common. Total number of wells in the state, 19,250. They rebounded after the extreme weather conditions in January and February. Number of inactive wells remains steady right there around that 18 to 1900 number. Typically, it's been right around there, and we're in that same exact spot. Completed footage over time. Nothing's changed on the bars on the graph on the left. The 2025 number continues to increase, but we won't see an accurate number on that until year end. Trends are indicated in the upper right-hand corner. Nothing's changed on those. What has changed on this slide is the U-shaped lateral update. And so these are wells that go typically down into the Bakken or Three Forks. They drill out 1 mile and come back a mile, or they drill out 2 miles and make a turn and come back. So in the shape of a U or a horseshoe. There's been 17 permits issued to date with these U-shaped laterals. 15 of those, as you can see, are U-shaped lateral permits, and 3 of those are actually 4-mile U-shaped. So out 2 miles, they make a turn and then come back 2 miles. And then 2 J-shaped lateral permits. So we continue to see the industry finding creative ways of drilling and completion that harnesses additional production. Here's your Fort Berthold activity. You can see that production is at 184,026, so a 4.6% decrease from the March oil production of 192,961. In the upper right-hand corner is the rig count, remains steady at 2. Lower left-hand corner is the total well count. You can see that's at 3,008, so continues to tick up just slightly. The fee and the trust wells are broke out in the bottom there. And the permit activity on Fort Berthold is that they have 141 active permits, so just a very, very slight decrease from last month. The total number of active wells again at 3,008, and then the breakout between the fee and the trust. Gas capture had a really good month in the state. The flared volumes March to April decreased by 8.91 million standard cubic feet per day to 149 million per day. The statewide gas capture increased with that, dropped from I think it was about 95 to 95.7. While the Bakken gas capture remained strong at 96. You could see the gas capture details in the lower left-hand corner, led by the FBIR Bakken at 97.4%. With that, I will turn it over to Justin Kringstad for his report, and then we'll answer questions following that.
Good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into some of the production updates. You heard from Nathan about the North Dakota numbers. Eastern Montana saw a little increase as well. South Dakota remaining steady on their oil production for the basin. When we look at Montana, 2 current active drilling rigs on that side of the basin, which I expect to see relatively stable production from that area, if not slightly growing as we head into the summer months. We'll fast forward to slide 4 here. We'll take a peek. I apologize, my numbers are different than yours. I'll keep an eye on the screen there. The one I'll call out here is on the bottom, back up to near record levels of gas oil ratio in the basin, just under 3. That trend continues. We will continue to see ebbs and flows, but when we talk later about some of the gas challenges, we're going to continue to focus on that rising GOR and how the industry is continuing to address that. Some slight shifts on the movement of crude oil out of the Williston Basin. We saw a slight dip in the amount of utilization by rail. Those barrels then getting back onto the more traditional pipeline exits out of the Williston Basin. About 20,000 barrel a day drop in that crude by rail month over month from March to April. Still right around 2 or just slightly under 2 unit trains per day loaded, leaving the basin. The destination for those trains continues to be dominated by the Pacific Northwest, over 90% of that oil being estimated to be headed that direction for those light sweet refineries in Washington state. Pricing around the region, some interesting movements. It's subtle here. I don't have any historical trends to put on here, but PAD 1 taking over as the top oil price market, at least in the month of March, for what refiners are paying. PAD 5, the Pacific Northwest area, following that, and then the Gulf Coast in that third region, PAD 3, as far as pricing goes, and relatively weaker pricing in that PAD 2, which is, again, the kind of the classic destination for North Dakota barrels, leaving on the Enbridge system into those Great Lakes refineries. The latest as of yesterday afternoon, taking a look at what prices were doing, Clearbrook was still trading at a premium. That was down. There were some times in the recent weeks where that was significantly higher at that premium at Clearbrook. When we see that contract, that's a negative signal for me as far as when we look at North Dakota net back for those wellhead pricing, which then translates to tax revenue. So we always want to see that as strong as possible. Premium is still great, premium to WTI. We really don't want to see it down into that negative territory or significantly deeper than that. The discount in April, $7.30, was still relatively weak. There are some signals that hopefully we'll see some stronger net back pricing as we head into the May-June timeframe. Maybe another $1 or $2 improvement on that, but we'll have to see once the official numbers come out. The truck and rail imports, exports, no major shifts there. There's different, there has been a shift in the way that the barrels are being categorized from the data we're pulling from the U.S. Trade Commission, what's falling under the USMCA versus non-classified barrels in and out. But as far as volume-wise for the basin, no changes there, just more barrels getting put into that USMCA category as far as tariffs and other trade balances go. 4% gas flaring for the month of April from non-confidential wells in the state. So that is great news. This is the first time we've had back-to-back months at 4%. So that trend slowly continuing to improve. So I would call that very good news on the gas capture front. When we look at new wells producing gas, new wells capturing gas, right on par, that's exactly where we want to see the numbers. No major discrepancies there to raise any red flags. This is the EIA updated oil price outlook. They put this out in early June before all the volatility came in. So it appeared, at least last week, that this would be a major bust in what their pricing looked like. Naturally, because of the events taking place with the contraction, things getting back on pace with that lower right-hand graphic following the world production, world consumption, some of those balances starting to dominate versus some of the political unease and supply concerns, getting back to some more of the fundamentals in the pricing, at least for now. We look at gas processing, no major changes there, no major new announcements to make as far as new plants, and no major changes as far as some of the urgency surrounding that. On the residue gas transmission front, so at the end of May, the Pipeline Authority put out an RFI, request for information, to the industry, requesting information on systems that could move North Dakota gas from western North Dakota to eastern North Dakota. The deadline for those packets and those information to be submitted is today. So by the end of today, I'm expecting to see information coming in from multiple parties. We will see how many submit information. That information, the plan there is to take that to the Industrial Commission this Thursday at their meeting in the morning. And so that information will then be made public and available for parties to review at least the non-confidential sections of those information packets. So stay tuned here in the next couple of days. There will be more coming out on that. I got ahead of myself a little bit there. We'll go back to northern border market share, still hovering that 80 to 90%. A lot of the near-term volatility has to do with some production, but also looking at what's happening with ethane, whether or not it's going into northern border, taking up physical space, or whether it's being put into the NGL pipelines. Ethane, again, is that commodity that has a lot of flexibility in what the industry is going to do with it. We're seeing, at least for now, a lot of that ethane being pulled out, put into the NGL stream. And so no new announcements, but again, stay tuned in the next couple of days here as details likely from WBI and likely from Intensity as well will be submitted here later today. And no announcements on the open season, anything new there. And nothing on the NGL. So I will pause there and I'll have Nathan join me and we can take some questions.
Address the one online.
Yes, please.
Okay. We had a question that was submitted prior, or two questions that were submitted prior to the director's cut. And one was they wanted to know how many simul-frac crews are currently in North Dakota, and are they leading to higher completions at current frac crew numbers? I guess we don't, Mark Bohr is over here as well, the assistant director. We don't have an exact number on simul-frac crews that are operating in the state. Just anecdotally, I think we've heard there's been an increased number of those. I don't have an exact number. I'll go ahead and start asking some questions on that and see if we can't get a number. But I think, and certainly, again, I don't have a good answer for you here, but certainly the reason that those operators are running those is for the improved capital efficiency that they see from that. The next part of the question is, do we have a wildfire forecast or any potential or rough speculative outlook? And what I'll say there is that, every day there's a task force that was created between the DMR and the NDPC, and that team is in place, and it seems to be working. There's also a team of individuals here at the DMR that reports out daily to the leadership team on the fire ratings in the state. And for the last several weeks, it's been very, very low. We've had a lot of good moisture in the western part of the state. Actually, the entire state has had a lot of rainfall, and so with that, the fire danger has been low. But a couple of weeks of dry weather and no rain, and that could change. But right now, it seems to be we have a good team in place monitoring this daily. We also have our field inspectors that are out in the field doing the great work that they do they do daily as well. So it's being monitored very closely. Other questions?
We don't have any questions online, so
Okay.
any in the room?
Yeah. I'd like to explain a little bit more of the volatility in the oil markets right now.
Mhm.
Middle East is probably causing it, but in some respects, you might think that might be good for North Dakota and US oil production.
Mhm.
I'm just curious.
Yeah, boy, the way I've explained this recently, and I'll let Justin add to it if he has anything to add. But in the last 30 days, we've had oil between $60 and $77. A month ago, I was sitting in your chair, Dave, and we were talking about just we were in the very low 60s to upper 50s. We were expecting a decrease in activity levels. Just a few days later, Israel sends some missiles into Iran's nuclear facilities, and oil goes up to, I think, about $77, $78 a barrel. So again, not necessarily fundamentally driven, but geopolitically driven by what's going on over there. Oil's been hovering around, kind of that 70. Let me think here, 72 to $75 since then. United States got involved, and they did what they did a few days ago, and then yesterday I think there was a message that came out about a potential ceasefire or an agreement between Israel and Iran, and with that, the market fears of tensions over there started to decrease, and thus oil price dropped last night dramatically in after hours trading, and so. I guess that's the best explanation I can give. Justin had a slide that showed world consumption and production, and that's from the EIA website, and they track that pretty close. But what I'll say is that graph those lines on that graph are going up and to the right, so the demand is continuing to increase, and the energy industry or the oil and gas market continues to meet those demands. And it's just been a real interesting geopolitical environment that we've been in for the last 6 months. But if you review what that graph, you'll see that the fundamentals are relatively close between supply and demand on that graph. So that's probably the best explanation. I don't know if Justin has
I have
anything else
nothing to add. Thank.
Are the amount of completions enough to keep oil production
Mm.
in North Dakota? There's been concern about that, whether or not it would be.
Yeah, completions were up. I don't know, Justin, you had some information regarding the lateral lengths and the number of completions that were going there.
Yeah, so on the completion side, I normalized everything back to 1280s. We know that roughly a third are going to be longer laterals than that, but you want to be in that 70 to 80 range in order to sustain production at around that 1.2 million barrels per day. So when you looked back at Nathan's data in the 70s and sub 70s, those type of numbers likely will not be strong enough to keep production back and stabilized around that 1.2 level. So until we can see some increasing number of completions or increasing number of longer laterals in that mix, it's going to be challenging. I'm encouraged to see frac crews remain in that 13 to 14 range, which I think is adequate when you look at how efficient the frac crews are. As we come out of winter, come out of the spring load restrictions, I do have some definite optimism for the second half of the year that things will stabilize. I don't think we continue to see this downward trend that we've seen.
And I want to follow up on the pipeline situation, the natural gas pipeline. It was discussed at this roundtable yesterday. And the person who represents Cass County Electric says, we got to get this thing done because we want to keep the oil industry strong. And we need natural gas in case we need to do natural gas for electricity. So what's your perspective on how that's going?
Yeah, I'm very encouraged by how things have been going. Obviously, I've been very engaged with the companies looking to develop these pipeline systems. My confidence is as high now as it's ever been that a solution will come together. It's just what that mix will entail as far as who the operators are and what the ultimate capacities are. But my confidence is again very strong that a solution will come to marry those needs of increasing gas volumes in the West increase in demand opportunities across central and eastern North Dakota. So bringing those two together with a solution, I think, is something that will address a lot of challenges and provide monumental opportunities for the region.
We have a couple questions on, it looks like online here.
Yeah. I can read them out if you need me to.
Like-
Got it?
Yeah. There are currently 30 rigs in North Dakota. How many were there last month? And if it fell, why? Are operators likely to drop more rigs and frac crews given weaker pricing? You know, this, like I said, this morning, we checked, Mark checked for me, the rig count in the state was at 32. We believe a couple of those to be top hole rigs, so rigs that drill the surface casing portion of the hole. And so that would indicate that the rig count is steady month over month. But when we were in last month's director's cut, most of the Israel, Iran, and Middle East tensions were not elevated to where they are now. And so we were signaling, because pricing was in the low 60s and upper 50s at that time, that we expected a rig decrease and maybe a frac crew decrease. And we'd actually heard from operators throughout the state that were planning to do that if prices remained in that range. I was hopeful with an increased price over the last couple of weeks that activity levels in the state would remain stronger, but I haven't heard exact plans. And again, volatility is hard for companies to plan for. And you know, many of the operators in the state now are larger operators and react less to the volatility in prices that we're seeing right now. So it's kind of a rough answer to the question there. There's also there were 13 frac crews last month in North Dakota, or for this month. How many were here last month? And I think the answer to that was 14. In the prior month it was 13. So rate did right in that range of 13 to 14. And then why did production fall in April? I don't have an exact answer on that. It's down to, you know, about 20,000 barrels a day. But I don't know if Mark, you have any additional. He's nodding that he doesn't. We don't have any additional information on why it's down 20,000 barrels a day. Likely normal month over month fluctuations. There wasn't any major weather conditions. Roads were all good. I think again, just normal month over month fluctuations. Any other questions? All right, with that, thank you, and we'll see you next month.